Hi everybody, this is Lara with your end of the week video for the S&P 500 for the trading week ending Friday 20th of December. A very Merry Christmas for next week to all of our members and viewers. The next target remains the same at 3238 to 3240. It now looks quite reasonable. Along the way up, as this bull market comes to an end, which may be in another 1 or 2 years, I'm expecting 3 reasonably sized consolidations or pullbacks, and the first is getting closer and closer. I expect it may begin about that target. Overall, classic technical analysis remains very bullish and supports this Elliott Wave count. The Elliott Wave structure seen here is a simple 5-wave impulse. That's how I'm viewing this bull market beginning in March 2009. Of the impulse, cycle 1 is off to the left of the chart. I've got that in the final week of November 2014. Cycle 2 ending here, 3, 4 and 5. When you label 1, 2, 3 and 4 in those positions on a semi-log scale and then draw an Elliott Wave channel about it, it has an absolutely textbook perfect fit. This channel is not drawn from 2 to 4, it's drawn from 1 to 3, and then a parallel copy is placed on 2, and when you do that it perfectly shows where 4 found support, forming this nice V bottom. That tells me that it's very likely that the labels 1, 2, 3 and 4 are in the correct places, and there are 2 important implications of that. The first implication is that 3 is shorter than 1, which means that to meet the core Elliott Wave rules stating 3 may not be the shortest, 5 may not be longer than equality in length with 3 at this price point. The second implication is if 4 ends here, 5 begins there, and 5 would be an incomplete structure at the weekly chart level. Cycle wave 5 may only subdivide as a 5-wave structure, either an impulse or an ending diagonal. At this stage, an ending diagonal has been invalidated, leaving the most common structure for the 5th wave, a simple impulse. When it's complete at the weekly chart level, it should look like a 5-wave impulse at the weekly chart level. And it's most likely within it to have an extended 3rd wave, because that's a particular feature of this market. Its 3rd waves are most commonly extended. What that means is it should look like 1, 2, 1, 2, 3, 4, 3, 4, 5. You should be able to see intermediate 4 counterpart to intermediate 2 and primary 4 counterpart to primary 2 showing up clearly at the weekly chart level. And within intermediate wave 3 we can see minor 2 at the weekly chart level. It lasted just 2 weeks, and so I'll expect minor 4 also to very likely show up at the weekly chart level, so that the impulse of intermediate wave 3 has an obvious 5-wave look to it. And so this wave count sees this 3rd wave, this is the middle here, extending within this 3rd wave, which is extending within this 3rd wave, which is extending. When it arrives, primary wave 4 may not move into primary wave 1 price territory. When it arrives, intermediate 4 may not move into intermediate 1 price territory, and likewise minor 4 may not move into minor 1 price territory. And so now that price has moved far enough above the ends of these first waves, there is now enough room for these next 4th wave corrections to develop. But not yet. I am looking for very specific bearish indicators in my classic technical analysis before I call for an end to minor 3. Within minor 3, no 2nd wave correction may move beyond its start below the invalidation point. I am leaving this down here to be more conservative. Let's take a look at the middle of this 3rd wave, how it's extending at the daily chart level, where this low here is this point here. Here's this extended, stretched out 3rd wave. When 3rd waves extend, they show their subdivisions at higher time frames so that they look like obvious 5-wave impulses. So far we see minor 1 and 2 here. Minor 2 was a deep, sharp zigzag lasting 10 sessions. Minor 3 still looks incomplete, but it's getting very close now. Minor 4, when it arrives, may not move into minor wave 1 price territory below the invalidation point, and if it is deep enough or time consuming enough, it should find support at the lower edge of this channel. Minor wave 4, when it arrives, may end somewhere within the price territory of the fourth wave of one lesser degree. And so this is a range to expect minor 4 may end in, favouring the upper edge of that range, and it might not actually get that low. Sometimes the fourth waves end above fourth wave price territory in a bull market. Keep redrawing this acceleration channel. Draw it from 1 to the last high, place a parallel copy on the end of 2. The lower edge will be support, eventual support for minor wave 4. The target for intermediate wave 3 remains the same, for it to reach 1.618, the length of intermediate wave 1. And the target for primary 3 also remains the same. Along the way up to complete intermediate 5, I am expecting 1, 2, 3 big fourth wave corrections, getting bigger as we move to higher wave degrees. But I don't think we're quite there yet. At the hourly chart level, I'm focusing on minute wave 5 to end minor wave 3. Again, an extended third wave within the middle. This is really typical for the S&P. We count it 1, 2, 1, 2, 3, 4, 3, 4 possibly to end on Monday, and then the final fifth wave up toward the small target just above now. Within Minuet 4, Sub-Minuet C may move slightly below the end of Sub-Minuet A to test support at this gap before moving up and away, and to avoid a truncation. Sub-Minuet. Minuet 4 may unfold as a little zigzag counterpart to a possible flat correction for Minuet wave 2. That would give perfect alternation. They both may show up at the daily chart level as 1, 2 or 3 small doji or little red daily candlesticks. Keep drawing this best fit channel. I've drawn it from the start of minute 5 to sit across these lows, and then placed a parallel copy up on this high so that it contains all of minute wave 5. While price remains within the channel, assume the trend remains the same, upwards. If and or when price breaches the lower edge of the channel with downward movement, not just sideways, then assume there has been a trend change and the end of minor wave 3 and the start of minor wave 4. And remember, if minor wave 4 doesn't get to within the price territory of minute 4, it may end above that point. When minor 3 is over, I'll draw a Fibonacci retracement along its length, and I'll be looking for minor 4 to be 0.146 or 0.236, the depth of minor wave 3. If at the weekly chart level we move the degree of labelling for the entire bull market all down 1 degree, then instead of a huge green supercycle trend change coming at its end, we may only see the end of a first wave within a bull market to continue for decades yet. For this wave count, when cycle 1 is complete, then a short-lived bear market, and probably quite shallow for cycle 2, lasting not much more than a year possibly, may then develop to be about 20% or a little bit more of the depth of cycle wave 1. The difference between these two weekly charts is probably best viewed at the monthly chart level, and I'm linking back to those monthly charts at the beginning of every analysis for you. If you haven't already viewed those charts, please do so. Also, I do have alternate wave counts at the monthly chart level that do not have a limit for this bull market. And so if your own analysis is even more bullish than this wave count, you may want to view those monthly charts. However, I will only publish these weekly charts, which follow my main monthly chart at this stage, because this structure in the labelling has such a textbook perfect fit in terms of 1, 2, 3, 4 and the channel. The other alternate wave counts at the monthly chart level do not have such a good fit. This is the monthly chart showing the entirety of the bull market. I can draw no conclusions about December because this current month is still not over. But on this chart, I've noted 3 big consolidations with these shaded boxes. After price breaks out of one of these consolidations, the first thing we can reasonably expect is some kind of back test, which can take price back into the zone. Here, a back test slightly took price into the zone. I may expect a back test at some stage coming up soon, which may or may not, but could take price back into the zone before a strong move up and away. There has been an upward breakout from this big consolidation box. This is quite long lasting, and so it's reasonable now to expect the continuation of upward movement. There will be pullbacks and consolidations along the way up, but at this stage the bull market very obviously remains intact. I keep saying that this bull market has been able to rise on declining volume for years, and it's best viewed at this monthly chart level. Rising price, declining volume, rising price, declining volume, and again rising price, declining volume. Declining volume in current market conditions is not of a concern, but for the much longer term it will be. Eventually, what that suggests is that eventually, when a bear market does arrive, there is very little weak support below. Price may be able to fall quite strongly and quite quickly, but we are not there yet. This bull market still has underlying strength and health. Bearish divergence between price and RSI is not particularly good as a timing tool, and it is getting slightly weaker. On balance, volume confirms new all-time highs with price. At this time frame, ADX is declining, the DX lines are whipsawing. At this time frame, because price was in this big consolidation, there is no clear trend, as evident by ADX, but obviously, according to price, there definitely is after this upward breakout. At the weekly chart level, this week, price closes really close to the highs for the week. I'll expect more upward movement next week, and it does so with support from volume, although there is an options expiry date within there. Overall, we can say though that volume for the short term is supporting upward movement in price. Support below very strong at 3020 to 3025. On balance, volume at the weekly chart level confirms highs in price. RSI is overbought, longer term divergence remains, but shorter term divergence has disappeared. We can see that at the daily chart level. This longer term divergence may develop further before we see a larger trend change, or sometimes it just weakens and then disappears. But with the data in hand at this stage, there is longer term bearish divergence between price and RSI. That does not mean we have to see the end of upward movement now. It's an early warning only. ADX is too low to indicate a trend. If it rises to 15, the positive DX line is above the negative at the weekly chart level. ADX would then give us a signal that the market should be in an upward trend, which it obviously is. A series of higher highs and higher lows from this major low back here about a year ago now. At the daily chart level, we've got another gap. It gives us another target at 3020. While it's open, I will label it a measuring gap. If it is closed, I will then relabel it an exhaustion gap and will then expect a pullback or consolidation. We've had that happen here and here and here. Exhaustion gaps were closed, but the pullback or consolidation was very short term in nature. I will expect that could be so again. Friday moved price higher, although the candlestick has closed red. It's done so with support from volume, although this was an options expiry date. But still, we do have upward movement with support from volume. ADX is indicating that there is still an upward trend at this time frame, which is still not yet extreme. There is plenty of room for this trend to continue. ATR is overall flat to declining as price rises, normal behaviour for this market. On balance, volume confirms new all-time highs from price. RSI at this daily chart level had bearish divergence that has now just simply disappeared. RSI is overbought. That is a warning that market conditions are becoming extreme. Heed the warning by paying more careful attention to risk management at this time, but it does not mean upward movement must end here. What it does mean is conditions are becoming extreme and a pullback or consolidation is getting closer, but not that it is here now. MACD remains bullish, stochastics overbought, but that can remain very extreme for a long period of time when this particular market has a strong bullish trend. I will be looking for a bearish candlestick reversal pattern, a strong bearish signal from on-balance volume, a bearish signal from the AD line, and or a 90% downward day before I call for an interim end to this upward trend and a larger consolidation or pullback. At this stage, with the data in hand, none of those bearish signals are evident, and so we should assume the trend remains the same until proven otherwise. But careful attention to risk management is now more important. At the weekly chart level, price and the AD line move higher. Upward movement has good, very strong support from rising market breadth. This is very bullish. At the daily chart level as well, upward movement has strong support from rising market breadth. This is also very bullish. Between price and inverted VIX, there is now over 2 years of bearish divergence. Very obviously, this has proven, in current conditions anyway, to be absolutely hopeless as a timing tool for an end to this bull market and the beginning of a fully fledged bear market. However, what I am going to use this for is if I see a series of bearish signals in a row getting stronger between price and inverted VIX, I will then expect a more long-lasting consolidation or deep pullback. We got 3 weeks in a row here. It led to this strong downward week here. Only 1 week though. If we get that kind of signal again from inverted VIX, then minor wave 4 may have arrived. Not yet though. There is single day, short-term, mid-term and long-term bearish divergence all developing between price and inverted VIX. This, in conjunction with conditions becoming extreme, is now sounding a warning. Members should pay particular careful attention to risk management, but the trend at this stage does remain up. That's all from me this week with your S&P analysis, and a very, very Merry Christmas again to all of our members.